A very good afternoon, everyone. Welcome to today's uLaw webinar. Today's webinar's topic is around the law office or legal office expense management, how you best manage both your client and business-related expenses within your legal accounting system or a process that you use for your legal firm. Now, today's webinar is accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Once again, I repeat that today's webinar is accredited for 1 hour of CPD credits, professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. And kindly do use the chat window provided to ask any questions that you may have during the session. I do want to keep this to be within the 1 hour because I know time is precious and I want to be prudent of how best we use our time. Like every other uLaw webinar, today's webinar has a specific agenda. We're going to talk about the two major categories or types of expenses that a legal firm comes across. The one where you pay for your client, the expenses that you incur in executing or managing a matter or a file for a specific customer or client, which are otherwise called as disbursements. And there's, of course, the expenses related to running your business or your office, so your office management expenses, and then there are the client or matter-related management expenses. So the two major categories of expenses that a legal firm has. Okay? We're going to talk briefly about disbursements. Of course, we have conducted other webinars that are CPD in nature. Please do visit on our YouTube channel at uLawPractice, and we encourage you to subscribe to it because as we add new videos, you would start to see them show up on your playlist. But we're going to definitely talk about disbursements, how best to manage these disbursements, and the importance of disbursements around how you manage them, especially around how best you manage them so that you are able to recover that, because that's a very important differentiator between disbursements and office expenses, is that disbursements can be recovered. I am definitely going to try and speak out louder. Please do share with your in the chat window if you're able to hear me better. If you're dealing with disbursements for clients, then we talk about the two major opportunities that you have about how best you can spend them, the account that you could use to expend that expenditure. One, of course, you have the trust account. So if you are dealing with trust account, you do have the opportunity as a legal firm to actually pay for those disbursements right out of your trust account. So we'll talk about some brief benefits of how you best can exercise the trust account to pay for disbursements. But let's say you're a legal firm that deals with general accounts only, and if you're paying for this as a general disbursement, which really what it means is that you're using to pay for it up front, and then you're recovering it through including that as a line item within an invoice that you generate for your client. So apart from the dockets that you would include as part of that billable cycle of an invoice, if there are any disbursements such as court fee or application fee, or even if you actually spend for travel time, mileage, whatever you've agreed upon in your retainer agreement, those are expenses that, let's say, you include as disbursements and you've paid for it up front, whether using your general account, whether you're using your business credit card, or even if you're using your own cash. Those are general disbursements that are recoverable in nature that you include in that cycle of an invoice and then recover in that format. And we'll talk about the expectations of how best you can narrate this whole storytelling of what's happened within your expense management to an auditor when you're being audited. The Law Society, of course, wants to hear your side of the story around the narrative of how these transactions that have occurred within your business play out. And important documents are truly the screenplay, if you will, of how exactly every scene or expenditure line item transaction has occurred in your business, ensuring that there is no malpractice, ensuring that there's a certain prudence of how best you manage money, especially around trust money. Okay? So there's certain expectations from the Law Society, and we'll talk about what those documents are. Then we'll move on to talk more about office or the business expense management side. Now, these are, of course, expenses that are meant to keep the lights on and for your business to flourish, expenses that include rent, any utilities, your phone bills, even salaries. So even if you're managing and you're doing a payroll to manage salaries for your employees, that's an office expense as well. Corporate taxes, bank charges, any interest on that. Stationery, buying, laptops to run your business. Anything that you have considered as an expense on behalf of your business to ensure that you're able to run this business as a modern legal office will be considered and categorized under the office expenses. Now, there are many documents that can, again, narrate the storytelling around what's happened with the transactions that have occurred around your office expenses. And this is not more so meant for the Law Society. Of course, as part of the expense book, this is an extra piece of information that's included already. But more importantly so, the storytelling around office expense management is a narrative to yourself and to your firm so that you can then make smart decisions. You can make those little edits as you start to look at how your business is expanding, really take a deeper dive to look at the expense aspects of your business. Where are you spending a lot of money in your expenses? Are there opportunities for you to curtail certain expenses, or are there opportunities for you to increase certain expenses? So if you're looking at marketing expenses, and if you're really seeing the results of putting more money into a certain category of marketing expense has definitely increased your potential leads or your revenue, then of course you're going to make that smart decision, that informed, data-driven decision to facilitate more expenditure on that. So the expense book, as well as the analytics for expenses, gives you a great perspective of where money is going within your office as expenditure. Okay, so truly this is the agenda for today, really talking about these two major sets of expenses that occur. I'm sure you're well aware of these expenses, but this is a webinar that helps you almost refresh that, for lack of a better term, as well as understand certain key takeaways around Law Society's expectations and time pertaining. I would certainly spend some time to showcase to you as to how a legal accounting software such as uLaw can help facilitate, generate these documents, give you these different narrative perspectives. So truly, what is a disbursement? In layman's term, really a disbursement is an expense that has been incurred on behalf of a client. I would go one step further to say that it's actually an expense that has incurred for a client, but more specifically for a matter or file by your legal office. Okay? From a Law Society standpoint, it's important for you to appreciate that, as I mentioned, a particular transaction around that disbursement has occurred, and they want to hear your story, and the documentation around ledgers and journals facilitate that storytelling in a very common, understandable format that they have already devised for you to follow. Okay? In terms of accounting, and this is where it's important, you have to appreciate that it's a double ledger. So when you're actually spending money, you're actually writing a ledger on the expense, but it's also writing a double ledger in a different accounting system. But at the end of the day, you're looking to record it in your accounting system, legal accounting system in this perspective. And at the end of the day, the books have to manage and have to be balanced between the accounts around how you spend the money, how you generate the invoice to recover it, and the recoverable expense itself. And if you look at the business expense, layman's term, these are expenses incurred that are not related to your client or your client's matter, but specifically related to the keeping the lights on in your business. This is not a recoverable expense, so you cannot recover your rent from a client directly, at least. You can, of course, understand what your total cost of operation is, and then, of course, adjust your rates, and that's how it's done. But expenses cannot be directly related to clients. I'll take a quick snapshot of this. So the major difference being disbursement is recoverable, and that's why it's even further important that you have a mechanism or a process in mind or a system like a legal accounting system that helps you track, record, measure, and report on a need basis, especially on a need basis as well as on demand basis. And when you're recording it, we often highlight how important it is to record transactions as and when they happen. And it's also equally important, apart from the recoverable component of it, disbursements also many times may include the provincial taxes. And hence, it's very important for you to track disbursements so that, of course, you can get paid, you can recover that. If you're not tracking these disbursements and you've just paid out for it, then you're not going to be able to include it as part of your invoice, and hence it becomes an expense rather than a recoverable expense. So what's special about disbursements? Capturing it when it happens because it's recoverable, it's your money that you've spent. What different vehicles of financial accounting do you have in your power to utilize as you pay for these disbursements? You have the trust account. If your legal firm does have a trust account with a bank, you have that vehicle as an opportunity. You also have the general account, of course, to pay for these disbursements from your business general account, business credit card, etc. The key difference is if you're actually paying for these disbursements out of your trust account. So let's say you're writing a trust check. There's a court fee for a specific matter, and it's $100, let's call it. No taxes, tax exempt. If you're actually paying for that disbursement from your trust account, assuming that you've accepted a retainer from the client and there's actually a client's trust balance, there's money in the trust account for that client's matter, then that expense or that disbursement is taken right out of the trust account. It never was your money to pay up front. You've already gotten the retainer, and you're using that retainer, and you're actually removing this disbursement from that retainer that you received from the client. So it's just a matter of showing it as an information. You don't even have to include that as part of an invoice. If $100 is taken out of a $1,000 retainer, the retainer left behind is $900. Right? It's just taken right out of the trust account itself. It's just meant for information purposes to show them the balancing of the ledger. If this is a general disbursement, even if you were to have a retainer, but let's say you do not use the trust account to pay for disbursements, you are still using your general account, and that same court fee was paid using your general account of $100, then what happens is that very important for you to be able to record that transaction. What was that expense for? Who did you pay this to? Include it in your invoice that you send to the client as information. And then, of course, indicate to your client that, hey, you don't have to pay me, but I'm just letting you know that I'm going to be withdrawing this $100 out of the trust account. because it's my eligible trust and move it from my trust account into my general account. Keeping in mind, it's important to track it because you just cannot move any random number. It's only that $100 that was part of that invoice that can be moved from trust to general. So even though you have a retainer involved, if you're paying for your disbursements using your general account, it's even equally important for you to track your disbursement because you're now tracking the amount, any provincial taxes paid, of course, then the eligible amount that needs to be included in that invoice. So what pieces of information do you need to capture when you're capturing disbursements? Very important, of course, the date. So when did this disbursement occur? Of course, this, as part of that storytelling, as part of capturing data, this is all of the different facets of that particular transaction, all the different salient features of that particular transaction. So when did that disbursement occur? Who was this paid to? So was this the Ministry of Attorney General? This was the Ministry of Finance? Was this to Staples? Was this to Walmart? To whom did you pay that disbursement? How was that disbursement paid? Of course, have you used your trust account? Have you used your general account? If the general account, which general account have you utilized? And if it's a general account, of course, it could be using a check, it could be debit card, it could be certified check. So the method of how you paid it is equally important. And it's always a great idea to capture, of course, the reason for that disbursement. So was this a court fee? Was this mileage? Was this an application fee? So what was the reason behind that disbursement for that particular matter? More importantly, right from the top down, of course, you're looking at the client's specific matter, and all these details almost flow up to the fundamentals, which is the client and the client's matter. You're definitely capturing the client's name, specifically the matter's name, number that this particular disbursement was related to. And as I mentioned earlier, if you're using the general account to pay for disbursement, then of course you consider what portion of that invoice that you're generating needs to include this disbursement. And the reason I mentioned that is many times, especially in corporate office, if you're dealing with corporate law, depending, of course, on what you've signed up for as a retainer agreement about paying disbursements, that cycle of when you include disbursements may change. Now, you may have a retainer agreement which says, I'm going to charge or invoice you as and when disbursement occurs, right? I'm not going to wait till a certain time. In certain types of retainer agreements with clients, you may say, I'm going to wait till the end of the month, and I'm going to summarize all of those transactions that occurred across that month, or it could be biweekly. And then on that time-based period, I'm going to generate, let's say, 2 invoices in a month. So it really comes down to the agreed aspect of that retainer agreement as to when you include this general disbursement as part of an invoice. Of course, for certain private clients, the majority of the legal firms, of course, have it in the retainer agreement or engagement letter that the disbursements are going to be invoiced as and when they occur, right? Makes it easier for you to manage it, makes it easier for you to make it part of an invoice and recover faster. Okay. I think we've covered this briefly. One of the aspects that we talk about quite often is when you're utilizing disbursements, given the fact that you do have a trust account, why not keep it simple? Why not pay straight from trust? So this is an option. It's not mandatory, but you have this fantastic vehicle called a trust account. Very few professions in this world have this opportunity to accept money legally from a client prior to start work. Okay? Of course, there are certain companies that take an advance, things of that nature. We've seen that. But as a profession where there's actually an agreed document which says, I need a retainer from you, and everything, the rules, the policies that surround and extend that retainer are very clearly defined by a society. So why not maximize the use of that particular vehicle? Right? This is also safeguarding your firm's interest, because then you don't want to deal with non-payment, bounce checks, where you've already spent the money. One is, of course, time and effort, which are docket-related, but even worse is to actually spend the money in advance as disbursements. So let's say $300 of court fee has left your bank account. And if you're not able to recover it, then that's money that's part of your expense now. You're never going to see that again. So why not pay straight from trust? Some recommendations around considering the trust account to pay for your disbursement. The fundamental aspect of it is, if you've paid your disbursement on actuals, so if you've paid $100 and you're going to disperse $100, then it's a great candidate to use the trust account as a way to pay for your disbursements. Examples such as court fee, because you can't make more money by saying to the client, I paid $100 to the court, but I'm going to charge you $200. Can't happen. So expenses such as court fee, application fee, there are jurisdictional, great candidate for you to use the trust account. And as I mentioned earlier, you don't have to do the act of recovering the expense, whether it's transferring eligible trust transfer or waiting for a payment. You don't have to do that act of recovering the expense. When you're paying out of trust, that money is just left the trust account. It was never your money. You never spent on it earlier, so you don't have to worry about it. And it also, in a very subliminal way, leads to you not having to do so much more bookkeeping. You don't have to generate an invoice. Technically, you don't have to go to the bank and do the trust transfer from the trust to general. One step less. Something for everyone to keep in mind. But of course, every legal firm is different. There's different reasons for why you've set up the way you have. And if, let's say, you do have a general account, business credit card, that's again a general business credit card information, or your own money that you're spending for these disbursements, and if that's what you're currently set up to do, then very important that you record that information as and when it happens with all the information that we just spoke about in the previous slide. The date, appropriate taxes, who is this paid for, what matter, the reason behind that disbursement, because you have to now document that, include it along with your invoice. Now, certain clients may actually ask you for the receipt of payment for these disbursements. You may have that set up in your retainer agreement. So then you have the added responsibility of either having a print or a digital copy of those receipts of payments. Right? We've touched this briefly as well. If you're paying out of general account, one other thing to keep in mind is, how do you recover? When do you recover? How soon do you recover that expense? And it goes back to that retainer agreement. Everything goes back to that retainer agreement, because that's what you've agreed upon with this client, and that's what the client has agreed. It's easier for you to validate your actions by just going back to the agreed retainer document. A best practice around how and when you generate this is, of course, you have to generate an invoice. But a best practice includes, in today's modern digital world, the ability for you to send your client a pre-bill. sending them a pre-bill apart from, and especially having a kick-ass retainer agreement, which clearly states the financial obligations and the expectation the client should have with regards to the billing cycle from your firm. If you can establish those ground realities, that they know that they should expect certain financial invoices to come out of your firm in a timely manner. But outside of the retainer agreement too, very important if you have a certain agreed upon cycle of when they should expect disbursements to be part of that. Hence, there are no surprises. And the reason I mention that is because certain expenses, especially if they're not on actuals, you may as a firm decide to mark up or mark down the amount that you actually disperse to your client. So there are examples where legal firms buy software that are used on a file basis in bulk, which entitles them for a better discount. So what they actually paid for to run that file using that software compared to what they actually disperse to their client may be different. They may be dispersing $100, but they may only have paid $50. So that's a markup. In some cases where it was never meant to be an expense, right? Maybe there's a situation where you have another legal practitioner representing your client at court, in which case you may actually have had a slightly extra cost involved compared to what was agreed upon as mileage time, in which case that would be a markdown in that particular disbursement. So it's important that you keep in mind all those different variables before you include it in the invoice, generate that pre-bill, have it approved one quick time from the client saying, hey, this is what's coming down your way, I hope you're cool with it, and then generate the invoice. Because you can always generate the invoice, send it to the client, but if there's a dispute, then of course there are more bookkeeping tasks that you have to do on your behalf. That's really what this is all about. It doesn't hurt to send the actual invoice. Client says, I'm not comfortable with this, I'm not paying you. Then you have to then decide to whether add it as a discount, mark down it, redo the whole invoice, right? So pre-bill helps you reduce the possibility of added bookkeeping tasks. Here are some examples of the types of disbursements that I would say can be categorized as good candidates that you can disperse out of both the trust and general. Of course, we're recording this entire webinar, so you will be able to come back to this particular minute or second in the presentation to review this. But in general sense, as I mentioned earlier as well, if you're paying disbursements and they're based on actuals, then the trust account is a fantastic candidate. If you're not recovering your disbursements on actuals, then most certainly only use the general account. Keeps it easier, simpler, less sluggish, less dirty, very straightforward. I would make your journals and ledgers easier to understand. So the narrative to your auditor would be far simpler, and you yourself would be really in peace as you project this film to the auditor, right? So there's a quick question around the trust being available through check. Absolutely, certain firms, many firms have trust checks, trust certified checks, and those are the two prominent ways in which people pay out of check. That is absolutely correct. So when you actually set up your bank account with your financial institution, or if you have to go back to your bank and deal with them, and if you have a trust account, most certainly do ask for trust checks. You may have to pay a small fee for it. Some banks don't charge you for it, but most definitely yes. Do have those trust checks available, easier to track, easier to manage as well. Now, of course, the two questions are whether you could use debit card and e-transfer. The quick answer is, at the time when the Law Society's bookkeeping guidelines and rules were based on, the digital components of everything that acts out is not well defined. It's still blurry. So yes, as long as you can keep a record of how you paid for this using trust, and you have the opportunity to record it and ensure that it's played by the rules, so that it's the actual amount, you have a proper record of it, and ensuring that there's no fees taken out of your trust account. Let's say you do it through an e-transfer and the bank would charge you $5 for it. You have to make sure that that $5 does not come out of your trust account. It has to come out of your general account. So as long as you can manage and maintain it and show the sanity of those transactions, most certainly yes. You are able to utilize those new modern techniques of paying for money out of the trust account. So now we've kind of had a brief understanding, I would hope, of disbursements. We're now, of course, moving along. We're going to talk about office expenses. But if you look at disbursements, we're trying to summarize. Let's say you've done all the right things at the right time of being able to track it. You're recording it on time. You're generating the invoices on time. You're ensuring that you're doing your trust transfers, or maybe you're paying it out of trust. In some cases, if it's purely general, let's say there's no retainer involved, right? And you just worked on this file based on leap of faith. It's a friend, family member. They didn't pay anything up front. You paid for everything. Then, of course, you most certainly have the added responsibility of recovering that expense by following up phone calls, emails, in-person visits to get that money paid as a client payment. So there's only 3 distinct ways in which you make money in that way, right? These are all the transactions that have occurred. I mentioned earlier, the Law Society is curious about how these transactions have occurred, if they've occurred the right way that it's meant to be. Everybody's playing by the rule, hopefully, and that's why they're doing these audits, to make sure that you are on track, to keep in mind those policies that govern how you manage disbursements. And instead of asking different questions to different firms, they have this one easy standard way by which every auditor would pretty much be trained to capture the essence of that story of your firm's way of dealing with disbursements. Man, that was a long English statement. And how best they can get that information out of you in a template is what's defined in the ledgers and journals. So the Law Society said, okay, I want to understand when does these disbursements happen, what's the total cost of it, and I want line item by items, who was it for, etc. And you know what? In my ledgers, I do not want to know what method it was paid. I want to capture that in my journals. So they define these templates, and that's what they're going to expect to see out of you, so that they get a general sense of what's happened with your firm with regards to disbursements or other things. Right? So we have disbursement ledgers and journals, both for your trust account as well as your general account. Of course, if you do not deal with trust, you do not have to worry about the trust account, because all your disbursements may have come out of your general, in which case it's just the disbursement general ledger, disbursement general journal. Now the FeeBook interestingly enough, is another important document that they do ask that do relate to disbursement. Now keep in mind, this is a recoverable expense. So when you do make that disbursement as part of an invoice, it is part of the fees or the revenue that you technically are generating, the potential revenue that you're generating. If they don't pay for it, of course it becomes your expense, right? It almost becomes part of your accounts receivable, is the point. And hence the FeeBook also includes disbursements that have been part of those invoice cycles. And we're certainly going to have a look at some of these documents in the last 10 minutes when I walk you through with examples from uLaw. But keep in mind, those are two important documents that are related to disbursement. In fact, there are four. Two for trust and two for general. Under trust, you have disbursement ledger, disbursement journal. Under the general account, you have a disbursement ledger, disbursement journal. Okay? So hopefully I've helped understand office expenses, disbursements, how best to manage them, how best to track, and finally record them in the journals and ledgers that are required. Now we move along to the other major category of expense that your firm would have, which is around office expenses. So we've definitely discussed this. A layman's term is expenses incurred for keeping the lights on in your legal office. We discussed this earlier as well, but again, just for purposes of time, let me skim through this real quick. Any expense that's related to managing an office. Again, you cannot recover this, but of course, expenses such as law society fees, that's almost the first starting point. Insurance, that's another starting point before you start to see your revenue. Your furniture, your rent, stationery. We spoke about marketing and advertisement. Certain gas expenses, so you can certainly, as long as you're able to showcase how best you're using your vehicle for office purposes, then of course, certain component of the gas, phone bills, cable bills, etc., internet, right? Then, very important to keep in mind that salary or payroll, as it's called, a very important component of an office expense. It's an expense incurred by the office. That's all there is. Now, if you're a sole practitioner, of course, it's paying yourself, expenses to even pay back borrowings, or if you withdraw dividends on a timely manner, then that becomes part of that office expense as well. And of course, how do you record them? Simple answer, you record them as and when they happen, as much as possible. Or, let me rephrase that, if you cannot capture them on a need basis or on demand, as and when it happens basis, then you need to put the effort, research, R&D, of course, of finding out the right tools, process, mechanisms to capture all those office expenses in an interim time period using either process or software so that you can benefit from any time management aspects of it. And what I really mean by that is, let's say certain law firms spend all the money, but they decide that they're going to use their business credit card for all office expenses. Okay? I actually know certain legal firms that actually have two business credit cards. One exclusively meant for disbursements. So any transaction that they record in that business credit card would be only meant for client-related disbursement. And they would have a totally different business credit card that is meant for office expenses only, kind of really differentiating the two, keeping it easier on your mind. And even when they reconcile their account, then it's easier for them to either import all those bank statements, those credit card statements, into the system or the process, so that even if they're not entering these expenses as and when it happens, they know that there's a way for them to capture all those expenses in a short period of time, rather than typing in each of those expenses that happened over that period of month. So let's say in a day rather, you have 3 or 4 different types of office expenses, right? And for a 22-day or a 30-day cycle, there could be 120 different transactions of office expenses. And if the firm is, a larger firm, it may be more. So one way is to capture it as and when it happens. Take a quick photo of that receipt, have it in your Google Drive, Dropbox, OneDrive, or your local folders, so you can always go back, enter it into your system, and then you're done with it. If you have that process and if you're confident you're going to do that, fantastic. Else, still continue to take photos of those receipts, capture them, have them in a digital repository, but then ensure that you have the right tools to import these bank statements, which of course has the truth behind these transactions. But you then have to ensure that you're doing it in a timely manner so that you can put more information into that expense that the bank does not tell you. For example, in a bank statement, you may just see, Walmart, $180. Okay? That's all you're going to see if you look at the bank statement. Maybe that $180 included, $50 for stationery, $30 for different category, and $100 for a totally different category. Walmart or that bank statement is not going to tell you that categorization. Whereas a bookkeeping system or a legal accounting system is one of the important purposes is that it can give you that kind of broad classification of where the money went. And hence, it's important that you take the time to record how the $180 was divided, give it a reason for what happened in that transaction using the bookkeeping system. So of course, since this is not related to the client, you don't have to worry too much about invoicing and stuff like that, but there are certain documents that you need to be aware of, such as the expense book. The expense book is in fact a Law Society compliance document. They do ask for it as part of an audit. It's something that you maintain on a monthly basis. And what's important for that report is timely data entry. Whether it's manual or as a system, as mentioned, importing data, doesn't matter. It's totally left to the individual legal firm's process and comfort. Now, HST payable statements, profit and loss statements, very important, because a profit and loss, or P&L as it's short form called, includes not just the revenue, but the expense as well. And of course, revenue minus expense gives you profit or loss for that particular time period that you're generating this for. Okay, so very important that you do keep in mind that as a business, when it comes to expenses, here are some of the important documents that you have to keep in mind that you generate. Expense book, most importantly, is required for you to show an auditor. Others, more for yourself, to give it to your accountant, for, of course, your filing of taxes and all that good stuff. And jurisdictional tax statements, a very important aspect. So if you've actually paid HST, if you have an HST account, you, of course, receive HST, or I apologize, I know I'm in Ontario mode, but if let's say you receive jurisdictional taxes from a client, let's say this client or this lawyer is in Ontario, they collect 13% as part of their income or revenue. So let's say there's an invoice for $1,000, they actually ask for $1,130. So $130 is the HST receipt. over the course of that month, they may have paid Walmart's, Staples, bank fees. They may have paid quite a few in HST. Not bank fees, sorry, that was a bad example. So let's say you paid Staples, Walmart, and you actually paid HST. Then you calculate the taxes received, taxes paid, and again, compare the two to then relate how much of money you owe the government or how much of HST money the government owes you back, especially if you paid more. When it comes to office expenses especially, it's very important that you're able to analyze the data because, analytics, data modeling, data components does not have to be Greek or Latin to a modern day legal professional. It is a way of life, like how WhatsApp has almost become a way of our life. We breathe, live everything out of messaging and social media, and especially given today's day and context and what's happening around us. So likewise, get yourself familiar with data, familiar yourself with the tools that are out there that can give you the power of the information behind your data. As I mentioned earlier, a bank statement is not going to give you the categorization that your firm needs to make informed, smart decisions around expenses. Of course, certain financial institutions give you apps that allow you to categorize them as and when they happen. That's a phenomenal move forward, but they're still not able to relate that to your legal firm's life of categorization, right, from a legal accounting perspective, right? If you're looking at analytics, for example, data such as who are the top clients for whom I have dispersed the most, or if it's an office-related expense, what are the top categories that I have devised within my firm in which I'm spending most money? What was it compared to last month? If I only look at that specific category, what have I spent over the last 12 months? So there's so much of information that you can gather so that you can then make those smart decisions. What do I do about reducing my expense? Maybe I don't spend much on rent. Maybe I try to find a better plan with my internet provider, right? So the analytics is another way for you to have a tool, I would say, that almost replaces an individual who's doing this in large firms. So almost does the work of a business analyst, if you will, that analyzes your business and it's helping you move forward and be more profitable. Of course, uLawPractice, we're a Canadian company. We're based out of Ottawa. All we do is legal accounting, practice management, and business accounting. Compliance, that's our key. That's our strength. But what we're trying to promote is not so much uLaw, it's more around the basics of legal accounting, the importance of legal accounting, and how that can better benefit a legal firm to manage its books. And hence we talk about this particular slide in almost all our webinars so that we encourage you to do the research, of course, on your own behalf, but then certainly helping you, I guess, convince yourself that it's always a better idea, no matter what tool you decide, of course. It's a great idea to, I would say, hone upon a specific product or tool, software, however you call it, that has the legal accounting components in it, so that it's going to be easier for your firm to manage your business, especially around reconciliation, especially around being able to track information as it pertains to your legal business, being able to capture both disbursements and office expenses in a singular document, which is the requirement, and ensuring compliance, ease of use, accountability, and of course giving you the power of data that allows you to make informed decisions. Okay, so with another 5 to 7 minutes remaining in our webinar, I want to be able to quickly jump gears here. I'll take a minute to wait for any questions that you may have with regards to today's webinar thus far. Of course, as a quick recap, we've looked at two major categories of expenses. Today's webinar's title, of course, is Law Office Expense Management. It's accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick, where we discussed the importance in the two major categories of expenses in a legal firm: disbursements that are client-related expenses, of course, business management expenses or on-office expenses that are not recoverable from the client, different documents that you may have to generate to tell the story around the different transactions that have occurred across these two categories of expenses. And I'm logged into my fictitious legal professional, Mr. Roger Moore, my favorite bond. And with another 8 minutes remaining, let me start off with two simple categories. I'll start with the client so we can put some disbursements, and I'll have an expense for office expenses, and then we'll try and talk about all these different documents that are meant to be produced on a need basis. Okay, so why don't I go ahead and just choose someone that I already have. I'm going to choose this client, Ryan Peter, and I'm going to say Ryan versus Boris. It's a landlord and tenant matter. Perfect. Actually, it's just too confusing. Let me just go ahead and create a new client. I'm going to say add new contact, add to clients. Rodney. I'm going to skip through all of the pertinent information. I'm just going to say, here's Rodney. I've got some of its basic information. Name, address, phone number. You can type all of that in as well if you like. But I'm going to start with a quick matter for Rodney. I'm going to skip through the conflict check, all of that you can otherwise do with uLaw, specifically focusing on disbursement. So let me go ahead and create a file, and I'll keep this as simple as possible so that you can quickly appreciate how data is captured as and when it happens. So let's say Rodney is a client, quick client intake, and for purpose of simplicity, and I've done this in my previous examples where I've taken trust, and I've kind of shown how you manage that. For purpose of today's demo, I'm just going to keep this fairly simple. And let's say there's a slip and fall matter. Assuming there is no retainer involved, I'm going to take the simple example of doing the work, generating the invoice, capturing that in an invoice, including disbursements, and then how it reflects in documents. So I'm going to go ahead and docket time so you could see how I'm combining docket and disbursements within an invoice. I'm going to convert this into a quick $600 flat rate. So that's the docket. Now let's capture the disbursement. And for disbursement, of course, I'm going to use the general account. I think there's a question around turning on and turning off the report of expenses. Of course, you could see in the miscellaneous, you have the option, top part being the disbursement, and the bottom part being the reporting of expense to your own account. Now, if you leave this empty, it does not get reported as an expense. It just gets reported as a disbursement. But if you want to specifically talk about that aspect, you could, again, leave the bottom part empty. And if you leave it empty, then it's not reported as an expense. So for example, let's say we had a court fee, tax exempt for $100. If I could just go ahead and hit save, I have not accounted for how I paid for it. This just goes into my invoice as an entry of $100 being dispersed, and that's all there's going to reflect. Okay? But the beauty of the legal accounting system, especially when you look at uLaw, is because it's a legal accounting system, it also allows you, as and when it happens, to capture how your firm may have paid for it. And hence you could say, I paid this to the Ministry of Attorney General. How did I pay for it? I used my general account. What was the method of payment? Or well, I actually used a check. And if you have a check number, you can put that in. If you have the date when you paid for it, whatever, you can give us as a reference number. We'll take it because that would benefit you at a later time. So you can, of course, just fill the top part, leave the bottom part empty if you feel fit, but we encourage you to also utilize, because at the same time, you're doing two different things. The top part here, about this line, is for the client. The bottom part here is for your office. And when you hit save, information is captured across two different components, but from one window. Let's quickly generate that invoice. I'm going to avoid doing pre-bills because I only have a few more minutes left. Let me go ahead and generate the complete invoice. I'll skip the preview. And I'll go ahead and generate the invoice. So there's $100 of disbursement. There's $678 of a legal fee involved, and hence there's a $100 no tax disbursement in this particular matter. Okay. Now let's go ahead. I'm going to click on this question mark that allows me to capture the payment. Of course, you'll follow up with your client at a later date to collect this, but I'm just going to go ahead for the purpose of today's demo and say, well, they paid me using e-transfer, and it got deposited into my general account. I can give them a receipt, and I'm pretty much done. Now, on the same particular day when you had this client, let's say you also went to do some shopping for your business. Now you're capturing office expenses. So the matters is where you capture the disbursements. And accounts is where in uLaw you capture office expenses. And of course, there's two different ways of doing that. You can either import a bank statement. So if you're using your business credit card, depending on who you bank with, you can download the business credit card's monthly statement as a CSV file, upload it into uLaw here, and then right away we capture every line item and allow you to do all the uploads of each of those transactions in one time, instead of typing that individually. Or if the, let's say, limited transactions occurred in a month, you want to capture it right away, you can just go ahead and say office expenses. And let's say on the same day, you went to Walmart, and we encourage you to use description in any legal accounting system to really maximize the use of this description, because this is a major difference between a bookkeeping system and a bank. Because a bank tells you what happened, the bookkeeping system gives you the opportunity to really tell a story around anything that you want to tell around what happened then. So Walmart, you can say paid for paper and print. So now that gives you a bit of a purpose for this particular expense. Makes it easier for you to remember why you paid this expense. I'm just going to go ahead and say, well, I paid $200. So automatically we capture jurisdictional tax. You can, of course, change this tax based on where you bought this, or which Walmart you went to. Let's say you paid to Walmart. And maybe you paid with debit card. And you hit submit. So you basically just captured events or transactions as and when they occurred. From a client's perspective, it's a slightly different workflow. From your office expense management, slightly different workflow, but you've captured the data. So now if I go into my compliance, we spoke about the general disbursement journal, the general ledger, and the expense book, and the FeeBook. So let me generate the general disbursement journal for the month of March. I will go ahead and generate my expense book for the month of March. I would generate the FeeBook for the month of March. It says that that's easy to report these Laws of Saudi report documents that you require once the data is in. And here's, of course, that invoice that clearly indicates to your client there was a court fee of $100 with no taxes, making it simpler for them to also understand this invoice. So total billable disbursements was 100, total disbursements with taxes 100. Were there any taxes on disbursements? No. Now, one of the new features, you can also include a predefined signature for your firm across all documents, okay? But we'll definitely talk about it in a different webinar. Now, if you look at the disbursement journal, clearly you could see using a debit card for Walmart. Now, this is the important component. In your bank statement, it would say Walmart, $226, in fact. That's all it would say. But what a bookkeeping system allows you to do is generate this level of detail around what happened in that transaction. $200 plus $26 taxes. So we've just captured that you paid $26 of HST in this total $226. Now let's look at a FeeBook. My apologies. I'm going to quickly look at the expense. Now, if you look at the expense book, we've captured the corporate expense. At the same time, we've captured the disbursement. So this single document called expense book has captured the two different important categories of expenses that your firm has. One around disbursements for your client, Rodney Jameson, with no tax, and one around the office expenses, and gives you a total of also the liability of HST that you have for the time period. Okay? So once again, I wrap up because I want to be cognizant of time, but truly the idea is there are certain expectations as a legal firm of how you manage expenses across your firm, both for disbursements as well as office-related. The fundamental is for you to have a way to capture this in a timely manner, but also do the research to use the right tool that can translate these captured data and transactions into law society documents, as well as key analytics that can help you make smarter decisions, but also be compliant with the law society. So analytics such as expense book tells you overall what was your expense for this particular quarter. It tells you how much was paid in each category. You can also capture who are your top disbursements for the month, what are your top office expenses for the month. Okay. So today's webinar is titled Law Office Expense Management. It is being recorded and will be available on our YouTube channel. I once again thank everyone for joining me for this 1-hour CPD session, and I look forward to seeing you at our next webinar next Friday at 2 p.m. Thank you, everyone. Stay safe. Have a wonderful weekend.